Hello, traders. We're 2 hours into trading at Friday, November 11th. First of all, thank you, veterans. Happy Veterans Day. Thank you for serving our nation. Thank you for protecting freedom around the world. Going to take a look at our last pick, Netflix. We're also going to take a look at the market and why I'm bullish right now. I was bullish a couple of weeks ago when I recorded the video. I'd mentioned to you then, seasonal strength is not something that you can ignore. I've been trading for 30 years. One of my axioms is never short the market in November and December. If you're super bearish, you can be in cash, but you cannot be short, not on a swing basis. You can be long also. We're going to talk a little bit about that. Netflix was the pick that I showed you. Why did I like Netflix so much? You can see that the market had been down, down, down. And so what we'll do is we'll overlay the SPY, and then you can see what the market had been doing while Netflix was actually holding support. Market down, down, down. That's why I liked this stock so much. Look, you can see it had rallied off its low. It had found support while the market was selling off. Earnings come out. Boom. Stock rallies up. I loved that relative strength. My issue was I didn't know if the market was going to move higher or lower. So the strategy was to distance myself from the action and to sell out of the money option premium. Bullish put spreads. That's the strategy we're going to be focusing on today. You can see how Netflix blew through the 200-day moving average. Well, we were going to be leaning on that support. We were also going to be leaning on the support from that gap higher. And so we were going to be selling it out of the money, 62.50, 260 bullish put spread in November, November 11th to be exact. Today, that spread's going to expire worthless. We sold that spread for a 45-cent credit. It's going to yield a little bit better than a 20% return. But look, we had to weather this pullback. Yes, we did. But you can see ultimately support was established. And now that the market is moving higher, this stock rallied instantly and that put spread vaporized. So support levels and everything that we had in place have actually held. Right now the stock is at 282, so there's no question that spread's going to expire worthless today. So Netflix, really like that pick. Let's take a look at the market. What has Pete so bullish, and what's Pete looking at right now? Well, we had this massive rally yesterday, and we're going to get into some analysis, but we need to get into that daily chart first. So let's keep looking at the primary chart here because the major moving averages are already there for us. Touch, touch, touch. You can see this downward sloping trend line here that was breached to the upside. Horizontal resistance also breached to the upside. 100-day moving average also breached to the upside. Heavy volume. Okay, now we've got something that we can sink our teeth into. Previously, this is what the market had been doing for the prior 2 months. All over the board. Don't know if it's going to go higher or lower. But this bullish engulfing candle, and you know this from my last video, was a big sign that support is in. So we made a new low for the year. This was a new low for the year, folks, right here. And look what the market did off the new low for the year. Rally, rally, rally. Rally, rally, rally. Rally, rally, rally. Closed on its high of the day. That is a key candle. And it paved the way for us to rally up, hit some resistance here. We're able to weather that storm. Now we have a higher low, double bottom, multiple technical breakouts to the upside. I think we're going to see a nice little year-end rally. Are there any fundamentals to support this? We've got the Fed tightening like mad. Forget the CPI. Yeah, it pulled back a little bit yesterday and everybody was yah, rah, rah, go. The CPI, I don't feel had that much of an impact on the move higher yesterday. Yes, inflation is going to stop going up at the rate that it's been going up. But that doesn't mean that prices are going to instantly pull back. So if the CPI came in at 0, all that means is that prices have stayed the same. They've maintained their high levels that we've seen over the course of the last year. That does not mean that prices are going down. Yes, over the course of the next quarter, maybe the next 6 months, we should see some price relief. But a lot of the institutions are saying, hey, when we look at health insurance costs, those are going up and they're probably not going to be coming down. Rents, housing is in short supply. Even with higher interest rates, rents are still going to remain elevated. Sure, gasoline prices might come down, your loaf of bread might be a little bit cheaper, but these are big expense items that are going to stay high. Services, wages, minimum wage, you've seen how high minimum wages have gone now. It's hard to attract employees. There are 10 million job openings and no one to fill those jobs. So wage inflation is real, and that's the largest input cost for manufacturers. So to expect that all of a sudden inflation is just going to go away, that's not going to happen. That also means that the Fed is not going to ease anytime soon. They've already said don't expect it in 2023. Got something shaping up. We got this bullish cross right here on 10p. It's the indicator that I use, the open from the day. All these gains from yesterday have been able to hold. I'm looking for a breakout above this level right here. If I get it, I will be adding to an S&P position that I took in here, and it was at 39.70 was my entry point for it. And so I'm going, excuse me, 39.80 was my entry point. So I'm a little underwater on it. I did not want to bail out right in here, even though we were testing the low of the day. I'll get to that in a minute. I would be adding to the position right in here. So I've already got that loaded off screen. If I see another green candle through here, I'm going to be buying this bullish cross and averaging my entry point for it. So let's talk about that CPI for a little bit more here, because it's important that you understand the Fed is going to continue to tighten. Well, why the heck did the market rally yesterday? A lot of it was short covering ahead of the number. So you had a lot of traders who were expecting a bearish CPI number. When it came out bullish, that was throwing gasoline on the fire. Whoosh, the market ran up. What other factors do we have in play right now? Goldman Sachs mentioned a week ago that institutions, excuse me, corporations are going to be buying back shares to the tune of $5 billion a day in stock buybacks. That's going to keep a bid to the market. You have cash at 21-year highs. Asset managers are sitting on a pile of cash. It loses value every single day just because of inflation. At some point, they're going to want to deploy some of that cash. Well, year-end seasonal strength is super, super strong. So why not put some of that money to work? If asset managers feel like the market has a chance to rally into year end, they're going to try and goose their performance a little bit. They do not want to miss that rally. Well, why would they worry about it? Well, they're not worried about the market per se. What they're worried about is their relative performance. They don't care that they lost money. They care that they lost less money than their peers, because that's how they're going to attract future money. Hey, everybody lost money this year, but we lost a lot less money, so you want to put your money with us. That's the mentality that asset managers have. They're also not looking at what's the market going to do in the next 3 or 4 months. That's what we do. We're traders. They look at, is the market going to be higher than it is right here 2 years from now? If the answer to that question is yes, then they're going to start deploying some capital right now. And I believe that is going to keep a decent bid to the market. So year end is super, super strong, and we can see big rallies on light volume. I do not feel that we are out of the woods yet. I feel that we could still see some weakness in the first quarter next year. There are a lot of unresolved issues, but right here, right now, yeah, I'm feeling pretty dang good about the market. And I love selling out of the money bullish put spreads, just like we did on Netflix, for that exact reason. We have nice market support. We're going to sell out of the money put premium on strong stocks that have technical support that we can lean on that increases our probability of success. And tick, 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 we take advantage of time premium decay. So that's the mode that I'm in right now. Now let's take a look at what the market did yesterday and how you might have traded it. So we get this just unbelievable, massive rally yesterday, 110-point rally yesterday on that CPI number right out of the gate. Well, what do you do if you're day trading in here? Well, what you don't want to do ever is to chase, because if you start chasing big moves like this, you're going to be vulnerable to a gap reversal. Long red candle, long red candle, long red candle. Lord, we have seen lots of those this year, and you'd have your head handed to you. So you have to be very patient early on, and you have to wait for your opportunity. Gap and go formations in a longer term bear trend are extremely difficult to trade on the upside for exactly the reason I mentioned, because you're vulnerable to a large pullback. So when you get a 110-point S&P rally, you should just kind of wait and see how things play out. Oh, well, look at this. This is the first tell. Market was able to move higher and add on to already big gains. Okay, well, that's nice. Okay, so we get a continuation here. Tiny, tiny, tiny little candles. And that tells us that there's resistance. We had a bearish 10p cycle that lasted about 2 hours. You can just see that it was drifting, drifting, drifting lower. Well, from the time that you got that bearish cross, which is about in here, to the time when you got a bullish cross in here, the market really hadn't gone anywhere. But what this time did was it gave buyers a chance to show their conviction. They were able to absorb any kind of profit taking or any selling. And when the market was not able to take out the low of the day after 2.5 hours, buyers started to gain some confidence that, hey, you know what? Even though this rally is huge, this is all short covering. Let's see what happens after shorts cover. So a lot of this move, short covering. Now we get this tiny little pullback in here, and they're like, this market could have been absolutely hammered down. They could have played whack-a-mole with this once shorts covered. But now we can actually see that the bid is holding up pretty well. And that tells us that there is natural buying, that this is not just a short covering rally. So as the day progresses, you get this nice little downtrend in here, which actually for someone who's looking to buy, when you had this low here, if you took that high and you took that open and you split that, you would be right about here, right about at the midway point. Never came close to testing the open. And the more that the market looks like it's going to roll over, the better, because you got people sell, sell, sell. Oh, I got a nice little upward trending line here that I can short. Yeah, we broke below it. Oh, this is good. Look at this. Yeah, we're starting to get stacked red candles in here. That's the mentality. So as soon as they get shaken out, there is a nice bullish engulfing candle here. There is a bullish 10p cross in here. This tells you you should be looking to enter right in here. Never got close to the low of the day. And here's the tell. When you want to be cautious, is you want to be cautious if you get long red candles like this that start stacking, okay? You needed another one here through the low of the day. That would have been a warning sign that this is going to reverse. Didn't get that. Instead, these tiny bodied little red candles, what they tell you is that there is support. They're nibbling, nibbling, nibbling. The buyers have not thrown in the towel. If they had, then you would get long red candles consecutively. Didn't happen. So the bid was ever present. And so finally, you get this release. Okay, well, that was a nice bullish engulfing candle off of the 10P bullish cross. You can see that this giant bearish cycle turned out to be a great big nothing burger. Market compressing on the high of the day during the entire bearish 10P cycle. That's actually something that we call a bullish divergence, and the next bullish cross should be good. And oh man, was it. Market closing on its high of the day, blew through the 100-day moving average. So we come in today. Well, what's today going to do? Well, first of all, after we have a massive market move the previous day, almost always the next day is really quiet and really dull because the market's still trying to digest that big move. It's trying to see where buyers are, where sellers are, and you've got an adjustment taking place. So out of the gate, you see red candles, green candles, long tails, long wicks, rally up, mixed, everything just mixed candle. We're back and forth right now. So there's nothing really good taking place. Now, I was long up here, actually right in here, because I felt that the market had a chance to continue to move higher with some good strength, especially after the open. There was a nice kind of a bullish hammer in here, although that's more of a doji. Yeah, that was looking pretty good to me. It's like, okay, I am longer term bullish. Yes, I don't mind being a little bit early. I will buy here, even though I've only seen a little bit of this bearish cycle. I suspected that we were moving higher and that this would be a bullish divergence, that this cycle would run and that the market would be able to maintain its bid. I was wrong. Okay, so right now I'm sitting on probably a 15-point S&P loser. I am more inclined to add because of my longer term swing bullish bias than I am to stop out on a trade. The only way that I will add is if this bullish cycle starts to produce some nice long green candles, and I need to get through this resistance level. If I see that during this bullish cycle, then I will add. If I don't see that, then I might even consider exiting my long position and waiting to see what the market has in store for me later today. If we're able to recover and close near the high, then I would be inclined to carry a long position over the weekend. So that's currently my mentality as far as my day trading position goes. As far as my swing trades, I'm going to be favoring the long side. As far as my day trades, I'm also going to be favoring the long side. So let's take a look and see what we've got. We'll use a couple of swing trading searches that I like to use in Option Stalker. And we're going to go into Green Royal Flush. This means that the stock has a buy signal across all time frames. Now, the one thing that we know about the market sell-off is that it has produced a risk-off mentality. Tech stocks in particular have been hit very, very hard. If it looks like the market's going to rebound, those will probably have the biggest bounces off of the low. We can be selective within tech. We don't have to buy Meta that's been absolutely annihilated. We could if it looks good, but I would prefer to buy a stock that even before the market rally has started to show some signs of support, some interest, some longer term buying coming in. So let's look at LRCX and then let's overlay SPY and I'll show you what I mean. So market down hard, new low in here. And once the market made a new low, you can see how the stock lifted with the market. This was the tell right in here. Well, what do you mean? Market down, 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 stock holding its own. This is where you started to see excellent relative strength. As soon as the market shows a little bit of strength, whoosh, see you later. So yes, this would certainly qualify as the type of stock that I would like to take a position in. Am I going to go out and buy it? I certainly could day trade it from the long side without any worry. But as far as a swing trade, yeah, it would also work because I'd want to distance myself from the action and get down to some of this technical support. This is where I would want to sell an out of the money bullish put spread. ASML, which by the way, let me shift gears very quickly. Within Option Stalker, we've redone our market view area. Super nice. You can go in and take a look at the sector analysis. If you go into sector analysis, you'll see right away basic materials today are a leader. I can click on basic materials and it'll take me right into some of the strongest stocks within the sector. These are the groups. If I click on the groups, like copper, I'm going to see, oh, there are two copper producing stocks. Well, let's take a look at that chart, see if there's anything there, and we can see that FCX has actually been very, very strong even before the market rally. Breakout there through horizontal resistance. Okay, market down, 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 stock compressing. Now the stock is releasing and we've got this 200-day moving average that we can lean on. So yeah, the stock looks good. What I don't like is the bearish hammer on the chart right now. The stock gapped up and now it's been pulling back. You can see it right here. So is it okay for us to consider a bullish put spread below this $34 price point? Yeah, that would be worth considering. Just want to show you how a top-down approach works. If we go into industrial metals, here you can also see where the strength is today. Now, if the stock has not been strong or the group or the sector has not been strong on a longer term basis, it may only provide us with a day trading opportunity. If we wanted a longer term perspective of what's been strong, then we would go in and we would focus more on the monthly chart and we would take a look and we would see which sectors are strongest, like healthcare up 7.7% in the last month, consumer goods up. You can see industrial goods up 14%, financials up 14%. Okay, well, let's go in and take a look at which one of those groups has been strong over the course of the last month, and we'll sort it accordingly. And then now you can see diversified computer systems, asset management, investment banks, brokerage, regional. We can go in and this is how we can use a top-down approach to find stocks that have been strong for a long period of time. And we can drill in. You can also see how on a 5-minute, 15-minute, 30-minute basis, these stocks have a buy signal. So this is another method that we can use. We have many methods of finding stocks with relative strength. So let's continue on the analysis. We're going to continue to take a look at stocks that look strong. I'm going to go in and change my view on the S&P 500 very quickly. Just want to be able to see what the recent price action is doing right now. And we're holding this bid right now. Still don't have an alert through that price point. If we do, I'm expecting it on this bullish cycle. I need to see long green candles. That's going to tell me that buyers are finally back in there and that I can take a position, average in. So that LRCX, ASML look good. Adobe, this is kind of that bottom fisher that I had mentioned. And I'm going to take off the S&P 500. Just know when we're looking at charts that it hasn't been until the last month and a half that the market has found support. So if I've got a stock that's been in rally mode for 2 months, it's been strong relative to the market. Adobe is interesting to me here because we're through this gap right here. And I do like that because it's likely to fill this gap in here. Even though it's not above the major moving averages, this is pretty decent from a day trading standpoint. I would definitely be in there buying that. You could sell an out of the money bullish put spread keying off of that 330 level. Don't know that that's going to be my pick of the day. ALB, that looks really good. Lulu, I love this downward sloping trend line, breach of the upside, new high of the year. Got major moving average down here. Hover over the E, earnings on 12.8. So very important point here. When we sell out of the money bullish put spreads, we want to make sure that that spread expires before the earnings date. We do not hold positions over the earnings announcement. That is a 50-50 proposition. When we can hit 75, 80, 85% winners, why do we want to subject ourselves to earnings? We don't. It makes no sense. So you can also trade post earnings. Company has just released earnings, really good reaction. Fantastic. Trade post earnings, trade pre earnings, don't hold over the number. So that's kind of what I'm looking at right now for Lulu, as we've got 3 weeks until that company announces earnings. So there should be some opportunities for us to sell some out of the money bullish put spreads. This is nice. Oh, SPY has just breached that trend line. I still want to see it poke a little bit higher, but I'm going to be watching it because this is where I would be adding to my position. And we are around the 339.75 price point, 39.74 right now. I'm going to be adding at 39.75. So we will see. I'm not in there yet, but I've got an order loaded. And if we get to that price point, we're going to get to that price point pretty quickly here. Let's keep looking for good stock here. XOP, GS, look at that breakout there. That is beautiful stuff. This stock is continuing to move higher. Excellent relative strength. Because it's a financial, it's not going to have great option implied volatilities. 360 strike price, 20 points out of the money. Okay, we're going to keep looking. I think I can find better. This is a monster run right in here. And usually financials don't make massive moves like that. So I'm going to be looking for something where the breakout, I am long at 39.75. My average price is 39.77.50 on my long S&P futures position. I have a double position. So I'm going to take one quick second and I'm going to post this in the chat room. Thank you for being patient. And there. Now everyone knows that I'm double long. So really looking for this rally to materialize. And I'm continuing to go through. AMAT is another one of those stocks. Look at that through the 200-day moving average. This is another semiconductor equipment manufacturer. Really strong price action in here. Just going to continue to look and see what else I can find. I want to find something really good. Sorry I haven't been able to do many videos recently. I've had a lot going on in my personal life. I'm working on a lot of features for Option Stalker as well. So there's so much that's keeping me busy. I do plan on doing more of them, 2 a week during market hours, and I'm even going to be looking into doing a live event once per week, Wednesday evenings, and that will be more of kind of a webinar Q&A type format. Nike, downward sloping trend line, breach to the upside. I do like this. Horizontal support right in here. Yeah, I like this. So let's take a look here. What do you got going on here? You see how that support lines up with the opening today. Okay, that's nice. When is the earnings announcement? Hopefully late. So let's take that crosshair off and see 12/19. I've got at least a few weeks. I can stay pretty close to the money. Okay, so I've got one line of support here. I've got the halfway point of the candle is another line of support. I also have the 100-day moving average. That is support as well. I also have this downward sloping trend line that comes into play probably right around that same opening of this candle. Lots of good stuff in here. And looky here, we've got volume. That's nice. I like that. Okay, so if we're keying off of this support level right here, that's at $100. So we're going to be looking at what we can get for those $100 puts. If I can get down to the 97.50 level, well, I like that even better because now I've got the open of that candle. I've given myself a little bit more distance. So let's take a look and see what we can find. And we'll go into the option chains here. I think we're going to have to go pretty far out in time. I believe that earnings date was on December 18th. So we're going to look at the December 16th expiration. Let me confirm that. December 19th. So December 16th will work. And first we'll take a look at what we can do from the farthest out time period. How far can we get out of the money on this baby? And so now as we scroll down, ideally we can get below the 1 standard deviation and 2 standard deviation. 97.50 takes us down to here. So the 97.50, 95 would certainly work. If I'm doing a 97.50, 95, that's $2.50 between the strike prices. I like to receive a 50-cent credit for that. If I take the $2.50 between the strike prices, subtract the 50-cent credit that I get, that's $2 that I have to put up in margin. 50-cent credit divided by the $2 margin yields me a 25% return. That's how I like to do my bullish put spreads. And this one certainly lines up because you can see that that spread is 48 cents bid offered at 55. Do I think I can get 50 cents for it right here, right now? You betcha. Let's just go one more week in and see if we can get that 50-cent credit. I doubt it. And so in this case, we'll look at the 92.90. And that actually we would be willing to do for a 40-cent credit. And it's not even remotely there. It's 14 cents bid offered at 21 cents. And no, it's not there. So let's make sure that we confirm that earnings date. But yes, I like that spread. And just based on the disparity in 1 week from a 50-cent credit to a 20-cent credit, I'm suspecting that maybe Nike earnings are going to be earlier than what's indicated right here. These are all estimates until the company actually announces. So I would want to make sure that that is a confirmed earnings date. Until it's confirmed, we're still going to post this, but something seems a little bit off. I do like Nike. Let's take a look at the 5-minute price action on that stock. And yes, today it has been able to rally. It's holding all of its gains even when the market ka-chunk, ka-chunk, ka-chunk sold off. That is a sign of relative strength, and we have heavy volume. So at very least, I like Nike for a day trade. Given my bullishness in the market, could we also consider doing a call debit spread? Yes, we could. I typically like to initiate those Monday and not hold over a weekend, but let's take a look at a call debit spread and let's also see how far out of the money or how close to the money we can get on this. So we're going to go to the daily chart. How high might Nike get? Could it get to the 200-day moving average? Nah, this is a pretty choppy, chunky stock. Up, down, up, down. This is a nice little breakout. We've got excellent volume. This is the type of stock that we would need to buy on a pullback. So what I'm going to show you is going to be a pie in the sky debit that we're going to try and pay for this, because the only way that you're going to get filled on this spread is if the stock pulls back and tests the 100-day moving average. So let's take a look. You got to be patient. This is the type of stock that pulls back, so that's what we should expect it to do. How far might Nike pull back, and where would I be interested today? Well, if it's anywhere near the halfway point, stacked green candles up in here, could it pull back to the 103.50 area and lose $1.50 today? Yeah, pretty easily on this one. Okay, well, the 105 would be of interest to me. But let's take a look at what other options we have to trade. And we're looking for immediate follow through in the market, and we're looking for immediate follow through in the stock. So let's look at the November expiration next week, November 18th. Let's see if we can do a pretty cheap little debit spread, and let's try and buy that stock on a pullback. And so what we'll be looking to do is to buy the 103, 105 debit spread. And right now, the spread can only ever be worth $2, okay? Because there's $2 between the strike price. Right now, we're going to be paying $1.20 for that spread if I'm splitting the bid ask. Well, I don't want to own it for $1.20. Where might that spread be trading if the stock pulls back to, let's say, 103.50? Let's say it pulls back to 103. That'll make it a little bit easier for the technique that I'm going to show you. Well, if it pulls back to 103, what's the price right now of the stock? 105. Oh, okay. So if it pulls back to 103, what I should be looking at is what would a spread that's currently $2 out of the money. So I'm going to go with the 105 and 107. Okay. Because if the stock pulls back $2 to 103, the 105, 107 is going to show me about where that spread will be trading. So what I want to do is I want to try and buy this spread as cheap as I can. Ideally, I'd like to be able to buy it for maybe 70 cents or so. That would still give me really decent upside next week. And if you look at the premiums right now, they're not there. But that is how I would approach it. So let me review that. Right now, the 105, 107 is at the money. Okay, 105, 107 is at the money. But I'm looking for a $2 pullback. So if I want to see where that stock, where the options would be trading on a $2 pullback, I have to go further out of the money on the call side to see where they might be trading. So I'd like to buy the 103, 105 call debit spread, but I'd like to do that for a 70-cent debit. If that price is available to me today, I'll put a bid out there and see if I can get filled. If I can't get filled on it, it's okay. No problem. I'll find something else that I want to buy. But Nike is a choppy stock, and we know that not today, but we know that from previous price action. So again, using the current strike prices and the current pricing, you can see what that spread would be trading for if you get the type of pullback that you're looking for, just based on where the other options are currently trading. So I'm going to continue to go. I don't know that I am 100% in on Nike. I still feel like I might be able to find something better. I'm going to go into relative strength 30 also, because right now we have had a decent little market pullback, and that's going to show me stocks that have been able to hold their own. Let's also look for stocks that are currently on buy signals across multiple time frames. That would be important for us. So we're looking for current relative strength, and there you can see market's been down. The stock ZS is charging to the high of the day. Go into the D1 chart. Not too bad. Let's take a look at some others. Tesla only up 40 cents. I would not want to be buying something like this. It's still very, very weak relative to the market. This is just a short covering bounce to follow the market as far as I'm concerned. What I would want to see is if this were the base, it would be climb, climb, climbing higher. This is bottom fishing. I'm not doing that. Just a matter of time until the sellers come back. Microsoft, not seeing anything great there. Autodesk, pretty nice, very choppy stock. John Deere has been strong for a very long period of time. Earnings coming up on November 23rd, so I wouldn't want to touch that. I still do like Netflix. I could easily do Netflix into it, not seeing anything that I like right there. So from a day trading standpoint, not seeing anything that's jumping out at me. Target, retailer, downward sloping trend line, breach to the upside, has shown some pretty decent resiliency in here. They're going to be announcing earnings. Yeah, 11/16. A lot of retailers are going to be announcing earnings over the course of the next week to 2 weeks. So I think retail you got to be a little bit careful with if they haven't announced. There's a good chance that they will be announcing. So continue to take a look through here, see if we see anything that is attractive to us. That Caterpillar is extremely strong. I have a stock that I have been looking at that I'm going to highlight because I love the price action to it. So let's get to it. I'm going to show you Crocs. Here's why I like it. And this came up on a search. I don't see it in these searches, but it's been on a search recently. So we have earnings here. Stock was able to maintain its bid even when the market was getting crushed. Earnings come out, the stock breaks out through horizontal resistance. It's above the major moving averages. It has excellent volume. So yeah, I like this stock. I love the fact that it was able to break out. And then the next day, what happens? They sell this thing off. Well, look, every breakout has been challenged. Every breakout challenged. Every breakout challenged. Every breakout challenged. Every breakout challenged. But what's different about this one is it preserves most of that green candle. And then now we see the real deal. It's continuing to move higher. So I like selling an out of the money bullish put spread on Crocs. Where would I want to go? I don't know that I'll be able to get much credit. If I hover over this, I can see the high was 83.64. So I've got to be below $83. I have to be. I would not want to do anything closer. I can go to 81. I can go to 80, maybe an 80, 78. So let's bring up some options. Let's see where they're trading. Let's see if we can get a spread done. Today, yes, it popped up. This is a bearish flag. Excuse me, a bearish hammer, so it's not been able to hold its advance. It's a choppy stock, so the only way to trade these is to wait for a pullback, just like I showed you with Nike, and try and set a bid out there that's lower. So let's take a look at where those options are trading. And on Crocs, we don't have much available to us in November. And if I just take a look very quickly, I can see the 80 puts. Now they're 20 cents bid, offered at 20. No, there's nothing there. So I'm going to have to go out a month in time. I have to go out to December. This is going to be a 6-week trade, but I like it enough to consider it. So let's see what we've got here. And again, if I can be below that 82.50 level, remember that was $83 plus. So I'm even inside of that, really keying off of this horizontal support level. It's post earnings. Let's take a look, see what we can get. And so I have a 82.50, 82 bullish put spread, 35-cent bid offered at 85 cents. I want to get 50 cents for this. That'll generate a 25% return over the course of 6 weeks. That's a nice return. Yes, it's also below the 1 standard deviation, also below the 2 standard deviation. 25% return is nothing to scoff at, even if it takes me 6 weeks to realize it. So yeah, I like that. That's going to be your pick of the day. I think we can find better short-term trades. So I'm going to look for a day trade just to highlight something that's really moving right now on a day trading basis. Let's see what's smoking hot right now. Going to go into custom search, and I'm going to be looking for a stock that has an M580X that is strong. I haven't run this search, so I don't know what I'm going to come up with, but we'll see. I'm going to go with a really good option liquidity. Let's see if there's anything with heavy volume today. Chances are no. Actually, I've got quite a few stocks that I could pick from. All right. These are going to be some nice stocks too, because I've got ADX, which means that stock is in a strong trend right now. If I wanted to, I could also be looking at a stock with a 20-day high. Let's do that. Let's see if we can narrow this list down. All right, look at that. Did you see how fast I was able to zero in on these stocks? Now let's take a look and see what we've got. We're looking for some Day trading momentum. Banned. Don't know it? Yowzer. Looks pretty good through this horizontal resistance. Let's take a look at the M5. Heavy volume. Yeah. Banned. I like it. I don't have to go any further than the first one right at the top of the list. Let's take a look at the rest. This is how we do it. This is Option Stalker. I've designed these searches docu. Look at docu. God, that looks good. Downward sloping trend line, breach to the upside, horizontal resistance, boom, 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 big volume. Be day trading the heck out of that when I conclude this video. Broken trend line, 100-day moving average. Take a look at that 5-minute. Yeah, market down, down, down. Stock making a new high of the day. FDX. Just going to look at the 5-minute charts right now. Look at that stock hold its gains with the market down. Big volume. Now I'm just going to click through the rest. I've already seen enough. I mean, those are all. Just look at that. GoPro looks great. GPS, that's Gap Stores. Grind, 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 grind. HEAR. Gappy, but yeah, strong. Wouldn't trade that one. It's got good volume though. And HPQ on the high of the day. Let's take a look at that daily chart. Through the 100-day moving average, through horizontal resistance. WBA, hitting that 200-day would avoid that. Nothing to really get excited about with Ring, although it is through a downward sloping trend line. Post earnings rally, got room to the 100-day. Yeah, but I've already shown you. Look how easy it was to find. BAND, Docu, Dow, FDX, right out of the gate. Took me 2 minutes to run that search. That is Option Stalker. That is trading stocks with relative strength. That is our edge. We've got a market that's going to be moving higher. We're through major technical resistance levels on a daily basis. We have a day of consolidation right now. All the gains from yesterday are being digested. The market is going to grind higher later in the day, I believe, at least to close near the high of the day. And then I believe next week you're going to see some follow through buying. At least that's how I'm playing it. Thanks so much for watching. Please leave your questions and comments. They fuel my energy. They motivate me to record more of these videos. I haven't done any recently, but I plan to do more in the future. So please look for those and look for some live events coming up probably toward the end of November and into December. Again, thanks so much for watching. We will see you very soon. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.